Right, 11 to 15. We start off with Yobridge. There's two businesses here that we want to address, but let's start off with Yobridge. 1st of July is the current date. This is the year end, and we're given the profit for the year at 5 million. So with Yobridge, the directors, I believe, have refused to adjust. Right? And we have a customer who's gone into liquidation. We won't be getting this money, 405,000. And then we also have some inventory issues as well. There's been a refusal to adjust. So those are understated, being understated by 198,000. So I think the first thing to do is to assess materiality. So immediately this jumps out as being material. And the inventory isn't. The inventory isn't material in this regard. So I think you always need to look at these as individual events, as opposed to when you are assessing them, look at them as individual events. So calculate materiality individually and to assess what will be done on each of these. I suppose it's really only on final determination or that you can talk about the question of aggregation. But in terms of when you're answering a question, treat it treat the because the question will ask specifically about receivables, so just focus on receivables is what I'm really saying. And then we also have this, I mean, this is what Microsoft is doing. I put Richmond Co. and it came up, and I thought that was quite nice. Then you have, well, Richmond is a listed company, GP of 14 million, revenue of 56. The chair is currently saying that their GP margins are 30. Best thing to do is to calculate it yourself, and you see it's actually 25%. So there's a difference in what they're saying versus what's actually. Remember, I think I mentioned, hopefully you'd have remembered, I highlighted that we do not audit the chair's statement. It isn't part of our audit because it's flowery and subjective. So it's not part of our audit, the actual chair's statement. So we'll see how we manage that. So they've put together they have a new system in place, if you like. So they've tested it extensively, and there's been no issue. So it's hopefully what jumps out at you straight away are key audit matters. You knew about this going into the process. You spent time testing on it. It wasn't a surprise. You will have a very clear section in your report talking about what you had done here, right? And it is a list of business as well. So that's the sort of background with this. Let's go to the question. Okay, so what we have here is that it says that which of the two elements are always. I think that's the trick question here. Always. So hopefully you would have picked up on that. We don't always have a number of these things. So what we will always see, of course, is the basis for the opinion, first of all, and we will always see the responsibilities of the individual parties, management, um, um, our auditors, and all of that. So those are the two things that we will always see. These will always depend on the size of the audit or what we're dealing with. This was an interesting one. The directors are refused, so it's a bit harsh to jump here if you went for modify. This is the real end situation. Discussing with the finance directors again. Oh, I thought this was a bit of a. I don't know. I can see how in reality you would think that was quite normal, actually. This probably made sense for me. I said, okay, you listen. The directors aren't working, so you're going to go to those charged with governance. So the audit committee, the board. You want to understand because you're really saying to them, if you guys don't think about this. So I suppose probably the best answer here really is to sort of look at everything as a whole, assess the materiality of the errors individually, and then aggregate to assess the impact on your report. So we need to sort of see whether or not it probably will, but I think just looking at everything as a whole, because we have inventory, we have this, and then I would do all of this, and then now discuss with those charged with governance. So in terms of the following steps, I think D felt best here, and then followed by B, and then A. So D, then discuss with those in governance, and then modify. So in terms of the next steps, D was really the next step. But this is just my thought. A bit unfair for an objective question because it's more about the process, and I've highlighted that before. 13. So here, what are the two things that are true? So definitely we don't. It's irrelevant really about materiality. You're always asking them to adjust misstatements, irrelevant whether or not they are material or not. And if they do not adjust receivables because receivables is material, you will put through a qualified opinion because it is material, right? Um, Receivables are material, so they have there's a straight issue of qualification there, right? Everything else is true except for this issue here. So C and D definitely stand out here. Key audit matters, like I said, we know that straight away. That was really just the second issue with all the new systems. That was always going to be the second issue. This one we want to be very careful. Just because there is a difference, we have a section, if you like, in the financial statements where we can bring attention to this issue. Looking for this document called other information. So we actually have a completely different section, other information, where we can talk about our differences with what the directors have stated. But because we do not audit, if you like, the chair's statement, we cannot qualify the accounts. We cannot say there is a misstatement because we just don't even, in the first place, if you like, do an audit on that. So the accounts remain unmodified, but in the other information section, we would discuss our differences, if you like, um, clearly highlighting that we do not audit. We do not audit the chair's report or the chair's statement. So please read that with caution, if you like. But of course, we will discuss with them to sort of amend that. But we are clear that we have no obligation to audit that report or that statement. Right. So therefore, the financial accounts remain unmodified. Right. Great stuff. And that's 11 to 15.